Hello and welcome to this July edition of Property News. Today I'm going to give you an update on the UK economy, talk about what's happening right now in the property market and give you some real investor insights for the next couple of months. So my name's Tony Law from Your First Four Houses, and my channel is all about helping you replace a job-based income with just a few properties so that you can give up the day job if you wish and go and do something more interesting with your life, like learning to ride a motorbike. If this is your first time here, be sure to subscribe to the channel and click that bell notification icon so that you don't miss out on any of the free content that I give you each and every week. So let's start things off by having a close look at the economy. Now, at the time of filming, we are unfortunately seeing a gradual increase in the number of COVID cases. However, it does look like we're still on track to have the lockdown completely lifted by the 19th of July. We just need to get as many people as possible vaccinated before that time. As the jobs market continues to recover, the Office for National Statistics has said that there is now 197,000 more people in work compared to this time last month. And that means that the employment rate has fallen once again, and it's now at 4.7% in the 3 months to April. In the year to May, the UK inflation rate jumped to 2.1%, which is actually the highest rate for 2 years, following a dramatic rise in consumer spending. This is now above the Bank of England's 2% target and will undoubtedly start to fuel the debate on whether interest rates should be increased. Although it has recovered slightly, in June I was fascinated to see that Bitcoin fell below $30,000 for the first time in 6 months. The digital currency lost more than 50% of its value since reaching an all-time high of $64,870 in April. After correctly predicting the recent fall, analysts at JP Morgan are saying that Bitcoin price is likely to move lower over the medium term. By the way, if you're finding this helpful, I would really appreciate if you could take a moment just to click on that like button. It really helps me if that's okay. So moving on to property. Well, obviously the really big news this month is that on the 30th of June, the stamp duty holiday came to a partial end. Whereas previously stamp duty only applied to purchases over £500,000, now stamp duty kicks in on all purchases over £250,000 and will be back to its pre-pandemic rate of £125,000 from the 1st of October onwards. However, the extra 3% stamp duty for second homes, and that obviously includes investors in many cases, remains unchanged and still applies. The asking price of property coming to the market rose a relatively modest 0.8% in June, although this is still the largest rise for this time of year since 2015. This means the average asking price for a property now stands at £336,073. That's up £2,509 from last month. It will come as no surprise that prices are once again at an all-time high in all countries and regions of Britain. However, it's clear that a combination of the high asking prices and low number of available properties for sale are finally starting to slow the market down a bit, with sales agreed in May just 17% of where they were in May 2019. That's interesting when you compare this to April of this year, where the number of sales agreed was an astonishing 45% ahead of April 2019. Welsh house prices are up by 14.6% since March 2020, and this is also where you'll find the highest jump in buyer demand, which is up by 44%. South West asking prices, i.e. Cornwall and Devon, are up 11.4% since March 2020, with properties selling so fast that this is now the area with the fewest number of properties available for sale per agent in the whole of England. In June, the estate agent Hamptons announced that for the first time in 6 years, it is now cheaper to rent a property than to buy a property across most of the country. Although rents have risen on average 7.1% over the past 12 months, increased house prices and higher loan-to-value mortgage rates have added significantly to the monthly cost of buying and owning a home compared to renting. The huge boom in online shopping has led to a real surge in demand for warehousing. Now, up until fairly recently, warehousing wasn't a particularly loved strategy by investors, but now, as town centres are struggling with too much retail space, the logistics sector are having an absolute boom time because they can't build warehouses quick enough. And lastly, on the property front, the BBC recently reported an outbreak of what they're referring to as online scammers who pretend that they own a property that's being marketed for sale online via an estate agent, and they then go and offer this property out to rent, obviously without the owner's knowledge. Basically what they do is they copy the property details from an agent's website where the property is legitimately for sale, and then they kind of reformat the advert to make it look like the property is for rent. They then advertise this property for rent in various online marketplaces and obviously steal deposits and rents from people who are in many cases quite desperate to find somewhere to live, perhaps because they've been rejected by conventional letting agents. There really are some hideous people out there, aren't there, in this world of ours? And hopefully this is never going to apply to you, but can I encourage you to maybe go and check to make sure that you can't see any property that you have for sale available to rent anywhere. Okay, moving on to my Investors Insights section. Before I get started here, can I just say everything that I'm about to share is just my personal opinion and I may well be wrong. You've got to do your own due diligence on everything that you're considering, especially any deals that you may be looking at. Now, I'd like to start this section off by asking you 4 quick questions. The first of which is, will the market crash, remain steady or continue to rise? Obviously, this is the big question that everybody is kind of asking themselves, and there's certainly lots of people in my position that are kind of putting out opinions on this. But I got last year's opinion completely wrong, and so I'm always really apprehensive about sharing my views on where the market is going. With that said, I have got a video coming out where I'm going to be sharing a lot of kind of key data, and I'm going to wait really until I actually get to that point to share all of my findings, because I want to make sure that I get this one right. With that said, can I just point out what we all know, and that is that stamp duty holiday has now effectively come to an end, isn't it? You're not going to get any deals over the line now that are going to be before the second part of the stamp duty holiday comes to an end. Obviously, furlough is coming to an end soon, isn't it? And naturally, as I'm sure you know, there is a little bit of negative sentiment creeping in out there. All of this needs to come into consideration as to where the market is going to be. And as I say, keep an eye out for that video. The second question I'd like to ask you is, will that deal still stack up if there is indeed a drop in prices? By this, what I mean is, the deal that you're currently looking at, the one that you're currently considering, and I hope you are considering one, what if house prices were to drop off slightly? Would it still make sense to buy it at the price that you've agreed? The third question is, will that deal still stack up if interest rates rise? Now, I've already talked about the fact that inflation has been nudged up to 2.1%. It's leaving a bit of a question mark about where interest rates should be going. And so if interest rates do rise, does that deal still stack up? Now, this may sound mad, but in my online property masterclass program, I actually encourage my students to work with a 6% interest rate, which I know when you look at it with today's eyes seems ridiculously high, but it's been there before and it could go there again. And so that deal that you're looking at, does it make sense if interest rates kind of nudge up to that kind of level? The fourth question is now the last time to sell any unwanted properties? I'm currently selling one. My buyer is fully aware they won't get it over the line before the stamp duty holiday completely ends. But there's still a real demand that's far greater than supply at the moment. And so despite the stamp duty holiday, despite all the other things that I'm going to be talking about in that next video, despite all of that, there is still a real demand. The market is still hot. And so if you've got any properties that you've been hanging on to and you're thinking to yourself, do I still want to keep this property? I would ask you to look again at it. Maybe now is the time to get rid of that property. So moving towards the close, I've got 2 final things to say. The first is, I really think the demand for warehousing offers investors like you some real potential. And these are warehouses, both large and small. So I would encourage you to go onto Rightmove, look under the commercial tab and have a little look and see what if any, warehouses are available right now that you could maybe buy. You're going to probably get them at a relatively low square footage. There might be the potential for development there into the future, but now the demand is really, really hot, so I'd encourage you to look at that. The final thing I just wanted to kind of look at, which I just think is absolutely amazing, is the time between offer accepted and completion. If you put an offer in now and it's accepted, you're not going to complete on that deal for around about 5 to 6 months. That's unprecedented, but of course it's a direct reflection of how hot the current market is. I really hope you found this video helpful, and I look forward to seeing you in the next one.